Hey everybody, it's Big V here, and today, guess what? You're right, we're talking teams. Today we're talking about financial awareness and how to actually keep track of all the expenses and income and know where you are in your business. I remember a time in my career where I was growing fast and we were selling a lot of houses and money was coming in and money was going out. And I remember sitting and wondering, where am I? I really didn't know where I was. And so I would look at my bank balance, and if the bank balance was high enough, I'd think, oh, we must be doing okay. Not realizing that there were a bunch of bills that I hadn't paid yet that were coming up. Bank balance accounting, which I know you're all familiar with, is not one of the preferred methods of keeping track of your financial intelligence and knowing where you are. So today I'm going to talk a little bit about how do we actually keep track of things and what are some of the financial benchmarks you could use as a team leader to know if you're in line or out of line of some of the best practices. Coaching 600-700 teams at a time, we work with literally thousands of agents and helping them become and have more financial awareness. I think it's one of the greatest topics that's underserved in our industry. We always like to track things like our gross closed income. What was your GCI last year? It was $100,000 or $250,000 or $1 million, whatever that number is. But nobody ever asked the real most important question, which, what was your net? If we had awards for net profit, how do you think those would go? And how many of the people that had the highest income also had the lowest net profit? You know, it's interesting as you look at real estate to really try and figure out what your profitability is. Just recently, as we were growing Workman Success Systems, I remember this night specifically because I remember sitting in my room. It was my living room, and all my kids and my wife, they were out of the house, and it was the sun was going down. It was a little bit dark in the room. And I was really thinking about, where am I? Where really am I financially? Our business, I know, was growing every single month. Our gross closed income was great, but what was our net profit? And I remember getting on the phone with my business coach, and the business coach said something to me that really made me think differently about who I was as a leader. He said, I know what your problem is. And I'm like, oh, good. Well, let's get right to it. You know what the problem is? I've been trying to figure that forever. And so is my wife. What do you think the problem is? He goes, the problem is the body has outgrown the head. Wait, is that a compliment? I don't think so. What he was basically saying is that your company has grown beyond your ability to have the financial intelligence to bring it to the next level. And so the business was bigger than what your experience was as a leader. And I said, so what do I do? And he says, you have two choices. The first choice is take your foot off the gas and really become a student of the financial intelligence required to run a business of your size. Or the second option is you hire someone that already has that financial intelligence and you keep going. Taking the foot off the gas is not in my DNA, so you know I didn't do that. And so I hired my first CFO. Hiring my first CFO was game changing, not only for me as a leader, but for my company, because we started to get real numbers as to what we were spending in each department of the company, what our business was, what our trends were. We started making decisions based on data instead of decisions based on what we hoped was in the bank balance. Financial intelligence is not only a critical part of being a leader, but having a high level of financial intelligence is essential. So let me just share with you some of the few things that we focus on and work on in helping you create your financial intelligence. Number one is we start by recording all of your income sources. Now they're not just buying and selling houses. There's lots of ways to generate revenue or create income in your real estate practice. There's rental properties, short-term rentals, long-term rentals. You can have affiliate agreements. You can send out referrals. There's all different kinds of ways of generating income. I want to know every single source of income, where it came from. I also want to know if you're paying out interest. What are your different interest places? And what's the interest rate on each of those loans? And then I want to know if you have any interest income, if you're collecting it. Second is I want you to list all your expenses. So first we do all of our income sources. Second, we do all of our expenses. And when you do your expenses, I want you to put them in categories. So I want you to record all your business expenses, things like rent, utilities, car, gas, insurance, E&O, advertising, marketing, all of the things that you would spend money on. I want you to put them in those categories so we can have a really good understanding whether or not something's out of balance or outside of what we call our financial benchmarks. The third is I want you to put your income and expenses now into categories. Real estate income, rental income, interest income, and then expenses in marketing, sales, overhead, employees, wages. Let's put them into categories. The next thing I want you to do is I want you to calculate your profit and loss. Having a profit and loss statement is simply you take all of your income, you take all of your expenses, and you subtract the expenses from the income. That shows you whether or not you have a net profit or a net loss. Hopefully, it's a net profit. Next is I want you to compare and benchmark. Now, When I say compare and benchmark, and this is a tool that I'd like to give you, I'd like to share this with you. It's called our financial benchmarking spreadsheet. And it's where we've simply created a spreadsheet for our teams. We put all their expenses, all of their income in, and then we have recommended benchmarks of how much you should be spending in each of those categories. As I share this with you and I give you these recommended benchmarks, it's not designed to be exact science. It's designed to give you an idea of whether or not you're on track or off balance with your financial income and your expenses. Let me give you an example. If your income is here and your expenses are here, what do we have to do? Well, we have to find ways to cut. If you have super high income and you don't have a life, maybe what we need to do is we need to increase your overhead and hire you an assistant. So those are some of the things that would make the biggest impact on your financial intelligence. So let's talk about benchmarking. Whenever we start a business, I don't care if it's a real estate practice or my own practice, my own coaching business, our intent is to be at a 50% gross profit after your cost of sale. And so I want you to think about that just for a minute. So if your goal is to be at 50% and you're running a team, well, how much do you pay your buyer's agents and listing partners? If you start them on a 50-50 split and you have all the expenses, it's physically impossible for you to be at a 50% gross profit after your cost of sale. That's why we use as an example in paying a buyer's agent 40-60 on the first 2 transactions, a split of 45-55 on deals 3 and 4, and then 50-50 on 5+. When you think through compensation, you always want to think through how do we create that 50% gross profit after our cost of delivering the sale. The next one is rent and occupancy. Your rent should never be more than 10% of your gross income. And so rent of 10%, your administration and salary should be around 15%, your management fees, etc., 10%, your training and education, 5%, and always budget for coaching. I don't know anybody who is a high performer that's 7, making $1 million or $2 million or $1 million net that doesn't have a coach. Make sure that you have training, education, and coaching as a line item budgeted. That's a non-negotiable expense in your business. When things get tough, people like to pull back from coaching. That's when you need it the most. 10% in marketing, and then, your other general expenses around 10%. And that should leave you with about a 40% expenses as a percent of the gross, which puts you below that 50% threshold. So as you think about your financial intelligence, I want you to use the benchmarking system that I shared with you. Download right here in the bottom, the financial benchmarking system we use with our private clients. And this might be a great time to reach out and ask for some help. You can reach out and contact Coach at workmansuccess.com and have a free private consultation with one of our coaches that will actually go through your expenses with you and help determine whether you're on the track to profitability. Being financially intelligent isn't an option, and it doesn't happen naturally. It happens because you intentionally choose to run your business as a profitable entity. Good luck with your financial intelligence. I hope the tools we provide make a difference in your next level of real estate success.